Hello world! This is Group 5 reporting!
Today, we will discuss the expenditure cycle, Part 1, Purchases and Cash Disbursement Procedures. The main objective of expenditure cycle is to convert company cash into physical raw materials and human resources it needs to conduct business. In this chapter, we will concentrate on system and procedures in acquiring physical raw materials because payroll and fixed asset acquisition system are discussed in the next chapter. The time lag between events is split into phases. First is the physical phase, which involves the acquisition of resources. Second is the financial phase, which involves the payment or disbursement of cash to the liability incurred in the physical phase. There are two subsystems constitute the expenditure cycle. First is the purchases processing subsystem and the cash disbursement subsystem. There are different activities involved in this process. First is the identification of inventory needs, placing the order, receiving the inventory, and recognition of liability. The major difference between manufacturing and merchandising is the way purchases authorized. In the manufacturing company, purchases decisions are authorized by the production planning and control function, while in the merchandising, the inventory control functions provides the purchase authorization. The first step in this process is the monitoring of the inventory records. In this process, determination of inventory level by the inventory controls personnel are done. For efficient process of purchase order, inventory control function will supply the routine ordering info of the inventory and the valid supplier of these items. These include the name and address of the supplier, economic order quantity of the item, and the standard expected cost of such items ordered. When the inventory level reaches the predetermined reorder point, purchase requisition is created. Then, this PR or purchase requisition is sent to the purchasing department for the purchase order to be created. There will be 4 POs that sent to the vendor, to the accounts payable department, receiving department, and the last copy filed in the open-close PO file. In the receiving department, they will receive the blind PO. This is to enforce the receiving clerk to physically check and count the items received. This allows the purchasing department to devote its effort to meet the need of the requested inventory. The valid vendor file contributes to the control and efficiency by listing only those approved organizations to do business with the organizations. This also helps to reduce the risk of having a fraud scheme in the company. The next activity is the receiving of the purchased item. In the receiving department, they were sent by the blank PO. This is to enforce the receiving clerk to count and physically examine the received goods. Then, after counting and checking the inventory, receiving report should be produced. 5 copies of receiving report should be produced. They are sent to the accounts department, purchasing department, inventory control for updating the inventory records. Next is in the warehouse or in the raw materials storeroom. And lastly, for the receiving department file. Next activity is updating the inventory records. Updating of inventory records depending on the company system. Some company uses the standard cost system or the actual cost system. In the standard cost system, there is no need for the invoice of the supplier's invoice because they don't update the cost in that file. But if the company uses the actual cost system, supplier's invoice are attached to the receiving report for updating the file. Then the last activity in the expenditure cycle in the purchasing system is the posting to the general ledger. The general ledger in charge will receive a journal voucher and a account summary from the inventory control function. After matching the total to the subsidiary or summary of the inventory, posting to the general ledger is done.
So moving on, we have to identify the liability that comes due. So the cash disbursement process begins in the accounts department by identifying items that come due. So each day, the accounts payable functions review the open file vouchers for such items and send payments approval in a form of vouchers packet or the vouchers to cash disbursement department. So now, to prepare a cash disbursement, the cash disbursement clerk now receives the vouchers packet and reviews the document for completeness and clerical accuracy. So for each disbursement, the clerk prepares a check and records the check number, the peso amount, the vouchers number, or the other pertinent data in a check register, which also called the cash disbursement journal. So I'm going to show you an example of a check register. Depending on the organization's materiality threshold, the check may require additional approval by the cash disbursement manager or the treasurer. So now, the negotiable portion of the check is mailed to the supplier and a copy of it is attached to the vouchers packet as a proof of payment. So now, the clerk marks the document in the vouchers packet paid and then return them to the accounts payable clerk. And now, finally, the cash disbursement clerk summarized the entries made to check register and send journal voucher to the following journal entry in the general ledger department, debiting accounts payable amount and then crediting cash and then its amount. So now there are two subsystems: the purchase subsystem and the cash disbursement subsystem. So first, the purchase subsystem. So as what Atichu said earlier, the inventory controls of function continually monitors inventory levels. So as inventory levels drop to their predetermined order point, inventory control formally authorizes replenishment with a purchase authorization. So what is the relevance of this kind of authorization? So formalizing the authorization process promotes efficient inventory management and ensures the legitimacy of a purchase transaction. Because without these steps, the purchasing agent could purchase inventory at their own discretion. And now, being in position both authorizes and to process the purchase transaction, unauthorized purchasing can result in excessive inventory levels of some items, while other will go out of stock. So either situation is potentially damaging to the firm. So it is a boomerang to the firm. So excessive inventories tie up the organization cash reserves and stack outs cost that will cause on loss on sales and manufacturing delays. So now the other is the cash disbursement subsystem. So the accounts payable function authorizes cash disbursement via cash disbursement vouchers, as what I said earlier. So to provide effective control over the flow of cash from the firm, so the cash disbursement function should not write check without explicit authorization. So the authorization must will be practiced strictly. So a cash disbursement journal or the check register containing the voucher's number authorization check provides an audit trail for verifying the authenticity of each check written. Now, in segregation of duties, so segregation of inventory control from the warehouse. So within the purchases subsystem, the primary physical asset in primary physical asset is inventory. So inventory control keeps the detailed record of the asset while the warehouse has a custody. So at the point, an auditor should be able to reconcile inventory record in the physical inventory. So now I will show to you the summary of a table or the table of summary of expenditure cycle control or their segregation of duties. So now, in segregation of the general ledger and accounts payable from cash disbursement. So the asset subject to exposure in the cash disbursement subsystem is cash. So the record controlling this asset are the accounts payable subsidiary ledger and the cash account in the general ledger. So an individual with the combined responsibility of written checks posting to the cash account and maintaining accounts payable could perpetrate fraud against the firm. So for instance, an individual with such access could withdraw cash and then adjust the cash account accordingly to hide the transaction. So there must be there's an easy manipulation. So also, he or she could establish fraudulent accounts payable to an associate or in a non-existing vendor company, and then write checks to discharge the phony obligation. So by segregating this function, we greatly reduce this type of exposure. So a teacher already discussed about the procedure or the flow of receiving an item from a receiving department from the receive of blind PO to receiving report. So now I'm going to discuss about the thief of assets. So in receiving departments are sometimes hectic and cluttered during busy periods. So in this environment, incoming inventories are exposed to thief until they are securely placed in a warehouse. So improper inspection procedures could coupled with inadequate supervision can create situation that is conductive to the thief of inventories in the transit. So now, so in accounting records, so the control objective of accounting records is to maintain an audit trail advocate for tracing transaction from its source document to the financial statements. So the expenditure cycle employs the following accounting records: the accounts payable subsidiary ledger, voucher register, and check register, and the general ledger. So the auditor's concern in the expenditure cycle is that the obligation may be materially understated on financial statement because of unrecorded transactions. So this is a normal occurrence at year-end closing simply at the year-end closing. So simply because some supplier invoices do not arrive in time to record the liabilities. So this has also happened, however, as an attempt to intentionally mistake the financial information. So hence, in addition to the routine accounting records, expenditure cycle system must be designed to provide supporting information such as the purchase requisition file, the PO file, and the receiving report file. So by reviewing this file, so the auditors may obtain evidence of inventory purchase that have been recorded as liabilities. So now there are two access controls: the direct access and the indirect access. So what is this direct access? So in the expenditure cycles, a firm must control access to physical assets such as cash and inventory. So these control concerns are essentially the same as the revenue cycle. So direct access controls include locks, alarms, and restricted access to areas that contains inventories, and cash. So now, what is the indirect access? So indirect access, it is a firm must limit access to document that control its physical assets. So for example, an individual with access to purchase requisition, purchase order, or receiving reports has this has the ingredients to construct a fraudulent purchase transaction. So with the proper supporting documents, a fraudulent transaction can be made to look legitimate to the system and could be paid. Now, the physical system. So, in this section, we examine the physical system. So this beginning with a review of manual procedures and then moves to deal with several form of computer-based system. So as mentioned in the previous chapter or the previous reporter, so they differentiate the manual system and the computer-based system. So the purpose of this section is to support the conceptual treatment of system presented in the previous section or the previous reporter. So this should help you envision the relationship between the organizational units and the segregation of duties and the information flow in the essential operation and effective internal control. So in order for us to design a sound computerized based system. So in addition, we will highlight inefficiencies intrinsic to manual systems, so which give rise to improved technologies and techniques used by the modern system. So now I will discuss to you the flowchart or the detailed flowchart of a manual cash disbursement system and the manual purchase system. So because Ate March already reported or already discussed the manual procedures of a purchase system, so I will now discuss to you the uh, the manual system of cash disbursement. So here is an illustration or a table of how the cash disbursement system will flow or the each procedures. So unlike in the manual purchase subsystem that has a lot of procedures or a lot of flowchart, this manual cash disbursement subsystem has a lesser or has a minimal procedures or flowchart. So with this, so at what as I said earlier about the procedures or the flow of the cash disbursement or how to prepare a the cash disbursement clerk received the voucher packet from the accounts payable, diba, and reviews the document for completeness and clerical accuracy. So for each disbursement, the clerk prepares three-part checks and records the check dollar, the check number, the peso amount, the voucher number, and the other pertinent data in check register. So now, the check along with the supporting document goes to the cash disbursement department manager or treasurer for her signature. So now, the negotiable portion of the check is mailed to the supplier, and then the clerk returns the voucher packet and check copy to the accounts department and files one copy of the check in sa iyang department. So now, finally, the clerk summarizes the entries made to the check register and send a journal voucher to the general department. So now in the accounts department, upon the receipt of the voucher packet, the accounts payable clerk removes the ability by recording the check number in the voucher register and filing the voucher packet in a closed voucher file. So finally, the clerk sends an accounts payable summary to the general department. So now in general department and general ledger department, so based on the journal voucher from the cash disbursement and accounts payable summary from accounts payable, so katunduha kabuk na dawat sa general ledger department. So the general ledger clerk posts the general ledger control accounts and files the documents. So now this concludes the cash disbursement procedure. So we can now conclude our discussion of manual system with 2 points of observation. First, notice how manual expenditure cycle systems generate a great deal of paper documentation. Buying, preparing, transporting, and filing physical documents add considerably to the cost of a system operation. As we shall see in the next section, the elimination of reduction is a primary objective of computer-based system design. So now, second, for the purpose of internal control, many functions such as inventory control, purchasing accounts payable, cash disbursement, and general ledger are located in physical separate departments. So now, this labor-intensive activity also add greatly to the cost of the system operation. So in computer-based system, so computer programs perform this clerical task, which is much cheaper and far less prone to error. So although the classical or the manual department structure may still exist in a computer-based environment, personal responsibility are refocused. So rather than being involved in a day-to-day transaction processing, these departments are now involved with financial analysis and exemption-based problem solving. So as a result, these departments are smaller and more efficient in their manual system counterparts. So next, Miles will now discuss or illustrate to you about the computer-based purchase cash disbursement and cash use application. So, because I am now done in the manual system.
In connection to what JM has discussed, businesses need resources in order to conduct their business, to be able to produce or sell a product, and to provide service. So, expenditure cycle is concerned with the acquisition of fixed assets, raw materials, and the use of employee labor to yield a finished product. Computer-based purchases and cash disbursements applications. So CBAS technology can be viewed as a continuum with two extremes. The first one is automation and the second one is re-engineering. So these two terms are different from each other, since when we say automation, it is the use of technology to improve efficiency and effectiveness, while re-engineering means the use of technology to restructure business processes and firm organization. CBAS technology can be viewed as a continuum with two extremes. The first one is automation and the second one is re-engineering. These two terms are different from each other, since when we say automation, it is the use of technology to improve efficiency and effectiveness. While when we say re-engineering, it is the use of technology to restructure business processes and firm organization. Same with the revenue cycle. After discussing what must occur and illustrating the steps in a manual system, the focus now shifts to how. So there are many approaches or different approaches in automation. The first one is automating purchases procedures using batch processing technology. The automated batch system presented in Figure 5-14 has many manual procedures similar to those presented in Figure 5-12. The principal difference is that accounting or bookkeeping tasks are now automated, like detecting the inventory level that reaches the reorder point and automatically create purchase order, process it, distribute it to the different departments and even to the vendors using the automated system. Next, I will discuss about computer-based cash disbursements. In this process, there are three departments that are involved. The first one is the data processing department, second is the cash disbursement department, and the last one is the accounts payable department. In the data processing department, the following procedures are present. First is the system scans for voucher currently due. The next procedure is that checks are printed for these items, and each check is recorded in the check register. The next procedure is that batch totals of closed accounts payable and cash disbursements are prepared for the general ledger update procedure. The second department that is involved in this process is the cash disbursement department. In this department, the cash disbursement clerk reconciles the checks with the transaction listing and submits the negotiable portion of the checks to management for signing. After that, the checks are then mailed to the suppliers. One copy of each check should be sent to accounts payable. The last department involved is the accounts payable department. So upon receipt of the check copies, the accounts payable clerk matches them with open vouchers. The automated system described in the previous section simply replicates many of the procedures in a manual system. So because of this, there is a need for a re-engineering of the purchase and cash disbursement system to produce considerable savings. The figure shows a re-engineered system that uses current technology to eliminate the problems that complicated the effort under both manual and batch systems. So that's the end of our report, the expenditure cycle part 1.
Purchases and cash disbursement procedures. So that would be all. Thank you.
Janelle also.
Hindi ka nang pinagkukuhan. Saan nindot ka position? Yeah! Ako na mo, guys.
Wala pa na picture na eh.
Dugay ka!
Sige, sige.
Dugay ka!
Mag-focus, mga good.
Aray ko! Purchasing requisition should be produced. Wrong. Today, we will discuss this. Hello, everyone.
Good day,
Good
everyone.
day. Hello, I joke.
Good.
Make your money stack.
Was that hot enough for you? So talented.
So that's So that's the end of our